going on? What's going on? What's going on, man? If anybody decide to pull up, y'all already know what the lick read. I'm just jumping on here to do this weekend, this Friday. I think it was Friday. I think it was Friday. Anyway, I sent out a photo. I sent out a picture on IG on Friday, and I know not everybody is on the IG group that I had made a while back. So I was just up here watching TV, ain't had nothing else to do. So I decided that I would jump on and do a video. Y'all know me, I don't like editing nothing. So what I do, I just go live and I say what I gotta say, do what I gotta do, and then just save it so it'll be up there if anybody want to tap back in later and check it out. But shout out, I see some people pulling up. What's going on? What's going on, Dominique? What's going on? Cool it now. Watch out. You better watch out. Oh, did I oh no, I didn't. I thought I hadn't hit. I thought I hit block on you, cool it. But as y'all, I'm in the living room, I'm chilling. I'm in the living room in a different little spot. I'm on my MacBook. Hopefully everything look and sound okay. Since somebody did pull up, y'all let me know if it sound. What's up here to learn and share? I knew you was gonna pull up. Y'all let me know if it sound okay, because I'm like I said, I was sitting here in the living room watching TV, and I decided to do this video. So again, I don't have the picture on. I don't have the picture on this computer, but the picture that I sent out was in the IG group, and I know not everybody that be tapping in to the lives are in the IG group. So I said, I want to be fair about it. I want to share the information with as many people as possible, and I don't want to. Okay, appreciate that. I don't want to like make it seem like I'm leaving people out, because I know one time before I mentioned something about sending out a picture and people are like, hey, I ain't in that group. I ain't in that group chat. I didn't get that picture. You know what I'm saying? So I didn't want to leave nobody out. So I decided to, just jump on, because I ain't doing that. My sweetie going to a birthday party. So, hey, the boys back there, Timothy and the stew. Chris playing video games, doing something, but I can't see nothing. I'm gonna have to put my glasses on. I'm gonna have to put my glasses on for this right here. That's better there. So I'm just gonna get right into it, man. So for anybody who wasn't privy to the what's name, oh yeah, and then the link is in the chat too if anybody want to pull up. I'm on my laptop, so let me see how I can maybe do this so I can see if anybody pull up. Let me move this to the side a little bit. If anybody do decide they want to pop up, because I'm not gonna look at the chat because I'm on my laptop. Well, I got the chat over there. I can see the chat too. So okay, I got it scrunched up so I can see the chat, and okay, this ain't bad. I like this little setup. Okay, here we go. So what I did, I sent out was it the spy that I sent out? Let me see. Let me look at the spy real quick. Was it the spy that I sent out with the I had my notes on there. There's no notes on this, so it might not have been. Oh, maybe it was the ES. Was it the ES? It might have been the ES. Let's see. Let's see if it was the ES. Yes. This right. I know it look crazy right now. I know it look crazy right now because it's like a different setup. So pretty much this is what I sent out. Right? I sent this out. This is what I sent out on IG. I sent out a daily chart. I sent out an hourly chart just for people to see, kind of see like what my thought process was going throughout the week, and kind of share, you know what I'm saying, what I had going on. Y'all see I even included some of the CBDR stuff that I've been forward testing in there. you know what I'm saying? Just and this is stuff that you all know. I've been talking about these same levels, like this same 4 hour fair value gap. I've been talking about this same stuff, you know, since we started. I was talking about this volume imbalance back there, if y'all remember. You know what I'm saying? I was talking about the same stuff. The only thing I didn't mention back then was this hourly order block over here. That's the only thing I didn't mention. I saw that later in the week. But early in the week, we was talking about all these different levels already. And this was our top of our box. This was the initially the low of our box. You know what I'm saying? All this stuff here. So what I'm going to thank you here to learn to share the ES. I appreciate you. I know you always you coming through with the notey notes. Okay, so what I'm gonna do, I'm gonna go to the ES on the I got the continuous chart up. So what I'm gonna do, I'm just gonna hide this stuff. I'm just gonna hide this stuff and I'm gonna go back through excuse me and redo it and try kind of talk through what I was looking at, right? So the first thing I did was looking at this is from this green candle here on the 17th this way. All of this is this week. So I just pretend like that's not there, right? So just push that over to there, right? I pretend like that's not there because we are, you know, this when I'm setting it up, this is what I'm seeing when I'm initially setting everything up, right? So we got our top and bottom, right? We got our range top and bottom. Now we got two ranges that we looking at initially, right? We got this range over here and the other range, right? Because we got this the price action got to show us what it's gonna do, you know what I'm saying, when the week start out. You know what I'm saying? It's got to show us what it's gonna do when the week start out. So, you know what I'm saying? But I say we got two ranges because we came down and broke structure and then we started going back up and came down. So technically we could look at this range over here too, but I wasn't looking at that range. So, you know, that's why I just mentioned that. Just keep that in mind that you could be watching that like come Monday, it can trade within this range because we broke structure and started going back up. But for now, with the benefit of hindsight, we're just gonna look at our original range from there to there. Okay. Um, Let me use my magic mouse for this right here so I can right click. Right click. I'm sitting on the couch. Don't y'all on y'all couch? Do y'all have cushions? And when I'm sitting on this side, but where my hand rests comfortably, like I'm put is right in the cushion crack. So when I try to use my magic mouse, I got to put it way over on the other cushion. So now I feel weird trying to use it. And the little stand that I'm using. What you say, son? Because I don't like sitting in the middle. I don't like sitting in the middle of the couch because I feel like I'm stuck in between the cushions. Oh, I know what you mean. Yeah. I know that. I don't like nothing hugging on all of my buttocks. Templates, weekly top, right? And then mark the weekly bottom. Everybody who know how I do, they already know how I do my marketing and stuff like that. Let me shrink this up because we got the benefit of hindsight, so ain't no need for me to hide that. It was a good idea to hide it just to show you like where it'd be starting from. You know, that's what I'll be looking at. But now that we know what's going on with the week, I ain't gonna worry about trying to hide that weekly box bottom. Come on, Magic Mouse, what are you doing? It just hiccuped for a second. What's going on with my mouse? All right, so I move that whole thing. All right, so our weekly top, our weekly bottom, right? So I'm just marking out the top and bottom, and then the PD arrays from this red candle this way, right? This red candle this way. We got a daily there. All right. We came into that daily, so I'm not even gonna. We got a volume imbalance. We came up from this candle. Let me move this back over so I know what candles I'm working with. God dog, my magic mouse he keeps slipping off this thing, man. Let me scroll it up like that. It keeps slipping off the thing and it's driving me crazy. Okay, so we got a we came into this daily fair value gap right here and came back to this red wick right there. We came wick for wick, then push back down, right? Push it into the. Now I remember why I took this order block off, because the week prior we had came up into, like, you know what I'm saying, close to 50% of that order block and touched that, and I took it off. You see what I'm saying? That's why I had took that off. I remember now. So we got this. Stay focused, Tim. Stop worrying about that mess. All right, so we got this volume imbalance right here. We got this volume imbalance right here. For anybody, if you tapping in and don't know what a volume imbalance is, volume imbalance is when the candle bodies don't overlap, nothing but the wicks overlap. So it's a volume imbalance in between there, because the bulk of the volume is in the bodies of the candles, and when the bodies don't overlap, ICT call that a volume imbalance. So we got a volume imbalance there. Volume imbalance there, and that's, we got a high right there. I'll mark that because them candles ain't there yet. Those candles aren't there yet, so I'll mark that high. Just marking the stuff for what's not present yet. Keep getting too close to that edge. This magic mouse is killing me because it keeps slipping off this thing. Get caught on the box top daily. It's, you know, on the magic mouse, it's got like a little on and off button. I don't know if it's an on and off button, like right there next to that little sensor or whatever it is, and that button keep getting caught on the couch. So put a magazine up under it, and hopefully that stop it from doing that. Okay. So we got the low, we got a swing low, daily swing low in the middle of it. We got a low, that's a low right there that's a daily low right there. So we're gonna put another line there because that candle don't exist yet. And then we'll just take off the stuff as we don't need it. Take off the stuff as we don't need it. Daily box bottom. Okay. All right. So okay, so we got the we traded up into this daily fair value gap. We got a daily. Okay. All right, that's it on the daily. We got that daily that we closed down there. So the daily high, daily low for this candle right there is marked out. Hey, how did I do that? How did I zoom that out just now? What did I do to make that zoom out? Whatever I did, I wish it had come back. It kind of zoomed out a little bit. Okay. All right, let's drop down to the 4 hour. Go to the 4 hour. And we're going to look at the 4 hour. We came up. We filled that 4 hour fair value gap right there. Boom. We filled that 4 hour fair value gap right there. Okay, now I'm looking back. Now that I'm looking back at this in hindsight, we came up to a 4 hour fair value gap right there. And then I had deleted that daily, but we had actually come up into the 4 hour. All right. Is that the same week? We got that low 14. Then that's the 17th right there. 13, 14. On my calendar, look at the dates. I don't get lost. 13, 14 was Friday. Okay. 14th was Friday. 14. Okay, right there. Yeah. We came back up into that 4 hour fair value gap. I see that now. And I had deleted that daily. I could have left that daily on there. Look at all this stuff right there. We got all kind of confluence. We got a daily order block. We got a 4 hour order block right there. So we had a daily order block in this big area, and we had a 4 hour order block in that same area. All kind of confluence going on right there. Okay, we got all kind of confluence going on right there. Okay, here we go over here. on the 4 hour. Right. So where's Friday? What is Friday end? Let me put a line where Friday ends so I cannot be lost because I'm trying to do this in hindsight. 16, 14. Okay, 16, 1800. So this the last candle on Friday right there. All right, let me put a vertical line there so I won't be lost. Vertical line. I'm gonna put this right there. That's the end of Friday. Brighten that up. All right, so that's the end of Friday right there. Okay, so that's the end of Friday, and then this right here starts Sunday and Monday. Okay, so this starts Sunday and Monday here. Okay, so here we go. Sunday and Monday starts here. So looking at Sunday and Monday, right? So Sunday night up until Sunday night up until Monday, right there. This is when we just climb straight up. Okay, we just climb straight up Sunday night up until Monday. We climb just come on, mouse. We just climbed straight up, right? Came up and we hit this volume imbalance right there, right? So this is when I was, when we first started, I was like, okay, if it's a bullish week, I want to go down. You know what I'm saying? If it's a bearish week, I want to go up. So we started out going up. We went up and we attacked, the volume imbalance first, right? Boom, we hit the volume imbalance. We came up here into this 4 hour order block right there. We hit that 4 hour order block, and then we started coming back down, right? And then on Friday, we came back down here, and then we went back up. This is over the entire week, right? I'm just giving a broad stroke real quick of how we moved, and then I'm gonna start to put in like what I used to look for like my trade entries. I'm going to mark this stuff out while I'm thinking about it. Okay, I'm marking out this 4 hour fair value gap right here. Right, template. I'm getting the stuff that, at least the stuff that I sent out on the picture. That 4 hour fair value gap right there. It was another one that we had marked down here. See, it did it again. I don't know what I did to make it do that, but okay, I had another one down there that I had marked out before, but and you see these are the lows and highs from the beginning of the week. So 4 fair value gap, there. Okay, so during the week we was going up. Let me go down to the hourly. Let me look for anything that I traded off of on the hourly during the meantime. This this here, we talked about some of this stuff earlier in the week about coming back to that gap. This is in my way. I can't hardly see the dates. Let me try to move this up some. Okay, that's better. We talked about this Sunday gap up. All right, that's the Sunday gap up right there from overnight, from Sunday to Monday. Right, that's the Sunday gap up. Right there, we talked about that coming down, hitting that, and coming back up. We didn't break that high, but Sunday through Monday, we came up and hit that volume imbalance right there. We ran this buy side liquidity. We hit the volume imbalance on the daily, right? Oh, that's what I forgot to do. I forgot to mark out our what's the names? How y'all let me forget to do that? Our equilibrium. Y'all got me out here slipping, man. Y'all got me out here slipping. God dog it, Tim. Come on. Y'all got me out here slipping. I ain't mark out my equilibrium. Okay, so mark out equilibrium from top to bottom for the overall range. Equilibrium for the overall range. So come from back here at 36.61. Range equilibrium. All right. All right. And then we just gonna call that equal for previous week. Previous week. All right. Boom. So that was equilibrium for previous week. And then through the magic of hindsight, went on ahead and put in the equilibrium for this week. So that's Monday. And then the high was made on Tuesday. So just put in with the magic of hindsight, we just put in the equilibrium for this week too, just so, what I'm saying? It is what it is. Y'all get it. Y'all get it. Current week. All right, equilibrium for the current week. I guess y'all like, Tim, why you just look at the picture and talk through the picture? I don't know. I feel like it's more effective if you just watch me bumble through putting everything on there. It helped like to point stuff out and why I'm pointing it out while I'm talking. Okay, so all right. So here we go on Monday. On Monday, we opened up, we gapped down right to the low, right? We gapped down to Friday's low. And the low on this candle is 35.90.50. The low on this candle right here is 35.91.25. So we gap down and kiss and poke through the sell side liquidity. Don't take a lot, just got to poke through it, right? Poke through the sell side liquidity, and then we took off. Ping out, got the ping out. You know what I'm saying? Now let me delete this line. Right. Okay, I don't delete it. That's the high up there. So we got the ping out. We came up, right? Let's drop lower and see where we went to on that on Monday. Right? We're gonna drop down. Let's look at the 4-hour first. Look at the 4-hour first. So boom, Sunday and through Monday. Right. Right there. Okay, so this gonna be like around the end of day Monday right here. This beat around the end of day Monday there. So looking at what we came up to on Monday, we didn't take out any highs on the 4-hour. We traded up through, we burst right through a 4-hour fair value gap. You know what I'm saying? With total disrespect, went through it. Bust through that order block. Right. Once we bust through that order block, we paused a little bit, came back down, and then took off again. So we didn't touch any premium PDAs on this leg up right here on the 4-hour level, right? Going all the way up to the end of day. This the end of day right there on Monday. We didn't touch any premium PDAs. Everything above this yellow line right here where I'm moving the mouse right there. That's the oh, y'all can't even see the finger on my MacBook. Y'all can't even see the finger on my MacBook, but let me change the colors on these so I can describe them with the colors. This one here is going to be red dotted, and we're going to make it 3. And this one here is going to be yellow dotted, and we're going to make it 3. All right, so the red equilibrium line right there. Can y'all see that mouse when it get big like that? The red equilibrium line, see if y'all can, no, y'all can't see that, is the premium and discount for the entire range. So we moved from a discount after taking this sell side, right? After taking this sell side, and we pushed up right, for Monday. And so Monday, I usually like Monday for to let the market show me what it want to do. You know what I'm saying? So for Monday, we moved up. It was just all gas, as you see. Then on Tuesday, we came out on Tuesday. Let's go down to the hourly and check out Monday. I don't remember. I don't know if I did anything Monday. I ain't even gonna hold you. I can't remember if I did anything on Monday. Um, so let's look at Monday on the hourly level. We already talked through all of this right here um, earlier in the week. All right, so on the hourly level, looking at Monday, as you see, it was all gas. Um, once the I see Robinson up in here. 10. Yeah, what's up? What's up with you, Tanya? What's up, Robinson? Yeah, 10. The whole 10 thing. So we came up into the premium, taking out uh these this fair value gap, coming up into this, up into this hourly volume imbalance over here. And we just kept moving up, came back down into this traded back down to this fair value gap, kept moving up. As you can see, we it's all gas. It ain't like once we got into the premium, the market just was hanging out in the inside the premium of the daily range, right? So let's check the premium of the daily range. Cause remember before when I was telling you the market have hang out in different premiums and discounts, right? So looking at the daily range premium, um, once we got up into the premium, all thing we did was came back close to equilibrium. We didn't even get back to equilibrium, and we just kept pushing, right? And if you look at the it stayed in the premium of the premium for the daily range. We moved up into the premium for the daily range, right? Poked up into the premium, moved back down into the discount, hit this fair value gap right there. They consolidated right there at the equilibrium for the premium section right there. Then we continued to trek up and then took out buy side liquidity on Monday. So once we took out the buy side liquidity on Monday up there, um, we hit that premium volume imbalance that I had marked out, the one for the higher time frame when we was talking about the daily candles. When we started getting later in the week, and I was pointing out the fact that later in the week we had went up into these daily PDAs and was trading back down into this 4-hour PDA. We hit that on Tuesday. We hit the daily volume imbalance. We hit the daily order block over here that I don't have marked out. All right. We hit the daily order block. I'll push it all the way out here. I keep getting too close to that edge. Right. So all this daily stuff, because the higher time frame, like I be saying a lot of times, this higher time frame stuff, it takes this magic mouse is killing me. I'm used to having two buttons, but it's just one flat thing, and I'm trying to control it and right click and left click order block, the bearish order block. Okay. So we got the bearish order block. All right, we got the bearish order block. This is that's an old high right there. Right, that's an old high. That's an old daily high also. I ain't gonna worry about marking that, but you got an old daily high right there that I could mark. You know what I'm saying? Matter of fact, I will mark it. Did I mark it on the other one? I think I marked it on the other one too. So that's a daily high over there. Y'all get it. So yeah, let me go ahead and stop being lazy. Since Robinson on the live, I ain't gonna be lazy. I don't want to hear him talking smack. Okay. All right. So we went up and we took out. So this was Monday. Then Tuesday, we moved up and we took out that high. We took out that buy side liquidity, went into this volume imbalance, right? We went into that volume imbalance that we was talking about, and we took that out on Tuesday, right? We hit that on Tuesday, right? And then we got up and we hit this previous high on Tuesday. So that's buy side liquidity. So, and I take that off. So that's three things we just took out on daily levels, right? On Tuesday. We Monday, then we came up on Tuesday. We took out buy side liquidity, um daily buy side liquidity, right? Took it out. We took out a daily volume imbalance on Tuesday, took it out, and we took out a daily buy side liquidity again, right? And this is external liquidity for the day, right? We took out external daily buy side liquidity on the day, right? So we took out internal, one more time, internal buy side liquidity on the day, taken out, internal volume imbalance on the daily level, taken out, and then external buy side liquidity on the day, taken out. All of that was on Tuesday, right? Now, we didn't deliver all of that liquidity until until Thursday, when we got back to this 4-hour fair value gap right there. We moved from a daily premium, right? We had a daily premium and we came down to a 4-hour discount. And if you look at it's in the disc, it splits the discount of the overall range and it's in the discount of the weekly. You see what I'm saying? It's sitting in the discount of the overall range, is sitting in the discount in the at equilibrium. It's split in the discount and premium of the overall range. This week's range is in the discount, and from Monday, this was like a discount PDA that we had made from the daily dealing range too. So we didn't deliver all of that daily buy side until Thursday. That's why when we got back down here on Thursday, when we was getting ready to go into Friday, I said, keep in mind, we're in a bearish week. I pointed out the fact that the candle was bearish, but we had came to this 4-hour fair value gap. And then we had got back down to this order block, this daily bullish order block. And we was coming up on equilibrium. I think I forgot to put this one on here. I think I forgot to put this on the picture when I sent this out. And this is a bullish order block, daily bullish order block. That's a bullish order block right there. Right? I don't like how that looks. Let's come back here. All right. You're trying to get it so I can read it and it don't be like overlapping. Okay, so I think I forgot to put that bullish order block on there. See, it keeps zooming in and out. I wonder how I do that. Like when I move the mouse, sometimes it'll zoom in and out. I don't know what I'm doing to do that. But but we didn't deliver that until Thursday. That's why on Thursday, when I was like, we're back in a discount. I don't like selling when we're in a discount, and we were coming down into this order block right here. Let me see. Click on that equilibrium. Mean threshold for this order block would have been like right at the bottom of that 4-hour fair value gap. But see what we came down to, close enough for government work for me. And then we'll look lower to see what that coincided with once we get to Friday. Okay, but I just wanted to point that out on the higher time frame. When we took out all that daily liquidity, we took out the previous internal liquidity for the for a previous high somewhere, volume imbalance for a previous high, and external liquidity for a previous buy side, right? So we took all that out and we didn't deliver it until Thursday when we took it out on a daily, brought it back to a 4-hour fair value gap. So I'll come back to the daily chart once I get over to Friday. Now going back into let's go back to the let's look at where we at. Wednesday. We did Tuesday. Okay, so Tuesday, what was Wednesday's date? The 19th, 17, 18. Yeah, Wednesday the 19th. So 19th on the 4-hour chart. Here we go right here. We still dealing in the premium section where, remember, we was talking about how price was hovering in between the premium section. It hovered up, that we talked about that earlier that week, where we was using the dealing range of the from the top of the box to equilibrium, because that's where price was hanging out, right? And if I draw it out, you see this is equilibrium right here. So for Wednesday, this from here over to there, all from this green little doji looking candle, but the line is at the top of the candle, right there. I don't know if y'all can see it. Where my line is, say 19 October 0200, right there, and then the vertical line, and then matter of fact, let me move this line over. So right there, from right there over to, that's the last candle on the 4-hour chart. So, and then equilibrium for that range is pretty much right there. So I'll just put a line there so I can move this field out the way. Right. So man, all these colors blending together. I need to get some. Let me see. All these colors blending together. These colors running together, baby. Let me see. Black. Fatten them up. Make them stand out. Okay. So in between those 4-hour candles right there, that's Wednesday. Wednesday. That's Wednesday. And that's the equilibrium for the premium area right there. So we hung out in that area. We came down right after running liquidity on Tuesday, taking out all of that daily buy side liquidity. We came down, right? We came down here, consolidated right there at the week's equilibrium. Remember, this orange line right here is the week's equilibrium. We consolidated there for the rest of the day, right? We came down, these 4-hour candles, we came down and consolidated right at the week's equilibrium, on top of the week's equilibrium for the rest of the day, right? So boom, the market is moving in a downward motion because we're in the premium. We came to equilibrium, and we started consolidating right at equilibrium on Wednesday. That's pretty much all we did on Wednesday, right? So now moving into Thursday, right? Moving into Thursday, since we came down and consolidated on Wednesday. I wish y'all could see the arrow, right? Let's move over to like Thursday's candles. All right, that's the last candle. That's the last candle on Thursday. And that's the first candle on Thursday. Okay, so it's last candle on Thursday, first candle on Thursday. Now, I think this might have been a time when I incorporated the CBDR. Let me go and check that so I ain't lying to y'all. So looking at Wednesday, and for anybody who don't know what the CBDR is, that's the central bank dealing range that ICT talk about. So we got to find the Wednesday's candles from 2 o'clock, between 2 o'clock and 8 o'clock, right? I think this might have been a time when I looked at that. I know I looked at it from Thursday into Friday, but I think I looked at it from Wednesday into Thursday also. So we're going to get a feel get the fib, and we're going to find the 1400 candle. Okay, this the 1400 candle right here. So any candle from 1400 over to 2000, or from 2 o'clock to 8 o'clock, right? Any candles in between this range, from the 8 o'clock candle in between there to there, right? So anything in between this range, you're going to look for the highest body and the lowest body, and the highest wick and the lowest wick, right? That's the CBDR, central bank, the CBDR dealing range, right? So going from here to here. Now, if you're bearish, right? If we're looking to sell, you want to look for price to retrace back up anywhere from 1 to 2 to 3 standard deviations from this range to look for selling opportunities. If you're bullish, you want to look anywhere from 1 to 2 to 3 standard deviations below this range to look for buying opportunities. And the ideal setup for taking shorts in the London would be for it to hit that 1 or 2 standard deviation from in the London kill zone, right? But if it don't hit it in the London kill zone, you know what I'm saying, I've been looking to see how it react in the New York kill zone. You know, I just been watching to see that. So looking for so we got the 1400 candle right here. So this 1400, right? And then this is so it was coming down, the market was bearish, so I look for the lowest candle and take it to the highest candle, because I'm looking for a price to go up and then come down. So the lowest candle during that time, this is the 8 o'clock candle right here. This is the lowest candle. No, actually, so the 1400 is the lowest candle, because this low, okay, because it's once this candle closes, right? Once this candle closes, right, you're looking from there that way. So, all right, so boom, go there. Boom, go there. Let me get my lock on. All right. Did that count? That's 90.75. That's 90.75. They even. So in this case, it don't matter. They the exact same. So I'm just for convenience sake, I'm just gonna go there like that. They the exact same. The blows are the exact same. Right. So I just use that one and then go to the highest body during that time frame. Right. So this is the highest body. Right. And so as you see right there, let me get a line. Right. The one standard deviation right there was I'm just gonna draw it from here to here. Just draw it out. Template. I don't have anything for that in here, so I'm just gonna pick something and then change the name. And I'll just change the name. One. And that's what it's gonna be. If it's spelled wrong, it is what it is. Sue me. Okay. So all right. And let me add another one here. Negative. Let's go -2. Let's go -2 right there. Add another line. Okay, and then 2 standard deviations would be right there. And as you see, we came very close to that. And look like in the New York. Yeah, that's the New York. Look like we came very close to that in the New York. Close enough for government work anyway. Close enough for government work anyway, to be honest. That's oh no, that's Oh, that's Thursday. Oh yeah, we're looking at Thursday, right? Yeah, we are. We're looking at Thursday. Yeah, we're looking at Thursday. So yeah, Thursday we came to it. Okay. So I think this when I was talking about the CBDR right there. So as you see, now let's drop down there to the hourly. Oh, we are on the hourly. Okay, so on the hourly, um, we started trading in the morning. Okay, this is the London time right here. The London just consolidated, and then at London open, we started pushing up. We didn't even take out any sell side. We didn't take out any sell side. We came down into a discount hit. We stayed in the consolidation. We didn't take out no sell side. We started pushing up. Immediately started pushing up. We came up as you see right there. Boom. We hit one standard deviation on the CBR and pulled back. Came back down into this hourly order block right there. We still dealing inside the premium and discount in the upper range. Looking at let's look at the daily candle and see if we're working within that previous day. Just looking at how price is moving around. Um, I know we probably talked about a lot of this already, but just for people who don't be catching live every day, just going through, you know what I'm saying, the mind of little Timmy Rogers, like through the weekly, that stuff that I just be incorporating. All right, all right. Oh, wait a minute. I'm on the wrong day. That's Thursday. Oh, yeah, we are on Thursday. I'm sorry. We are on Thursday, so I need to go to Wednesday. Okay, there you go. It's hard to do stuff in hindsight, man, because you be like getting lost in the sauce, missing days. So, all right, so that's equilibrium right there. Where's the other line that I put for equilibrium line? Did I delete it? Did I delete that other line? Why would I do that? Why would y'all let me delete the other line? Why would y'all let me delete the other line? All right, so there we go. So we pushed up, went to the CBDR, right? Tapped into equilibrium right along with the CBDR, came up, um, didn't really touch any other like PD array, right? We just came up to the CBDR, didn't touch any other premium PD array on the hourly. It could have been lower, but I ain't going lower. Then we pulled back down, reversed back down, boom, came down, came back into this order block right there at 10 o'clock, like right after the open. We came back down into this order block in a deep discount on the daily dealing range, the prior days dealing range. Can if anybody who don't see the order block that I'm talking about, I'll mark that out right here. This right here, that order block right there. We came down to equilibrium of that order block. Equilibrium would be halfway between this body, candle's body right there. So we came back down into that order block. Then we pushed back up. We came all the way back up to the two standard deviations of the CBDR dealing range, close enough for government work. It wasn't tick for tick, but it's close. This time looked tick for tick, but close enough for government work. Went two standard deviations of the CBR dealing range. We came to the very like close to the top portion of this order block over here. We could have very well went to some since we bounced off this hourly order block. Let's drop down 15 minutes and see if there's a 15-minute PDA that we kissed on that move. All right, so coming back up, we came into a rejection block right up here on the 15-minute. Right there, we came to a 15-minute rejection block. We came to a 15-minute fair value gap, right? And we came to the CB, two standard deviations of the CBDR. So we got a lot of confluence. We got an hourly bounce off an hourly order block in the discount, moved up to a premium, hit 15-minute rejection block, 15-minute fair value gap, and a 15-minute order block. Three different PDAs in the 15-minute combined with a two standard deviation move from the y'all can't see my, I wish y'all could see the arrow, the pointer. Let me see if I change it from, if I, do y'all see that? Do y'all see the pointer now instead of just seeing the fold cross? Let me see. Yeah, see, that's just the fold. Is the arrow, let me see, is the arrow on there? I can't really tell. Let me move. When I got the four things on there, do the arrow be on there? But or when I change it to, okay. All right, I'm gonna leave it on the arrow because it look like y'all can see the arrow better. All right, so like I was saying, when we came up and made this high right here, where I'm circling the arrow around, we came over here, we took out a rejection block. We got in the rejection block of those two equal candle bodies with the wicks on the top. So that's the rejection block right there. I marked that out for anybody who don't understand what I'm saying there. We got a rejection block right there, 15-minute rejection block there. We got a 15-minute fair value gap, pretty much the same spot as the rejection block. And then we got 15-minute order block right there, right? And we came, look like we came to equilibrium of the order block right there. Okay, so we got a lot of let's say, hey Tim, you going over how price action moved from the previous day? I'm going through the whole week. Edward, I'm going through the whole week. We up to Thursday right now. I just joined late, but I think he's going over the past. Yes, Michelle Tucker, what's going on? Yeah, I'm going over the whole week. We up to Thursday right now because I was doing it because I sent out a picture with like a few notes from like pretty much the overall weekly move. And now I'm just going through all the ICT stuff that I was monitoring. And I'm seeing some stuff that I missed also, but some stuff that I was monitoring and stuff that I was taking trades off of, just all the stuff that I was looking at throughout the week. That helped me with my, what was it? Was I 4 5 and 3? 4? I can't remember. Like the trades that I took, it was based off the stuff that I'm going over now. And I'm also seeing stuff that I was missing too. But so we came back up here, and as you see, we came so we got a lot of confluence on the 15-minute because we hit an hourly order block down here, the hourly order block there that we got drawn out right down here. This is the hourly order block. We came down to and we got confluence there because it's a 15-minute order block there too. That a lot of stuff, like when you have like strong confluence like that, when it's an hourly order block, and then when you look inside, it's a 15-minute order block, like right there at the mean threshold, that kind of give you that confluence. It kind of give me that I can trust this, so I can really make it strong. And then when you be looking at stuff like this right here, on Thursday, matter of fact, on Thursday, I think this was the trade that I missed right here. I think this was a trade that I missed. But if you look at this order block on the 15-minute right there, where I'm moving the mouse, if y'all can see the mouse, can y'all see the mouse? I see a finger. Yes. Okay. So this 15-minute order block right there, right? This red candle there, we came up, we traded back down, touched that 15-minute order block, right? We came up, right? Hit the came back down to this order block, because since this order block touched that order block, right, that made that a strong point for it to bounce off of, right? So when we hit it, right, we bounced up, and then once we bounced up, we came back down to this original order block. And this, when I was like, hey, this made, you know what I'm saying, this made that a strong order block. We haven't touched that one yet. And I think while I was talking about it, something happened. Then we came down and we hit it and it took off without me and it left me. I think that's the trade that I missed. But when you see the order blocks touch each other like that, and we came back and revisited this one, when we start coming back down, look for the next one that we haven't touched yet, because we're inside this hourly order block and we touched it, boom, and then we took off because we had the hourly order block that we was coming into, right? And then we came down here to this 15-minute order block and took off, got the ping out, right? So back on what I was saying, we went up here, so we went from the hourly order block and we came back into the premium, right? Because this line, right, this black line right there is the premium. We came, I mean, the equilibrium, we came back into the premium. And then once we got into the premium, we took out this rejection block, right? We went to the mean threshold of this order block. And then we got 2 standard deviations from the prior day. I got 1 on there, but this is 2. I'm sorry. We got the 2 standard deviations of this prior day CBDR range, right? And then we turned around and came back down, consolidated up there a little bit right around equilibrium. This is equilibrium for the daily range, consolidated around there, and then proceeded to move back down. And then at Thursday, right, this is the end of day Thursday. It's toward the end of the day on Thursday, and that's the, let me move this over to the end of the day on Thursday right here. We're gonna move this over to the end of day Thursday right there. Okay, so boom, that's the end of day Thursday right there. And as you see, where do we come to? This blue area, that's our and then, you know, the rest of the week is Friday, so I ain't got to worry about using this no more, right? So at 1600 Thursday, we came down to that that blue come on, thing. Go back up to the daily candles. Right. In the overall scheme of things, when I was talking about we ain't delivered until Thursday, right? See what a black line is right there. When we came up and took out all this daily stuff up there, we took out the daily volume and balance, the daily external buy side liquidity, all of that, and then we came back and I say we didn't deliver it until Thursday, right there. That's the Thursday line. Let me move this out of the way. We got Anthony on the phone, FaceTime. What? Is that an old text? Y'all hold on for a second. We got Anthony on the phone on FaceTime. What? What is he talking about? All right. Sorry about that, y'all. I don't know what they're talking about. That was my family. But right there, as you see, we came down and we delivered it to, let me move this over real quick. We delivered it, boom, right there to the 4-hour PDA right there. So we took out the daily premium PDAs, right? And then on the weekly left, this is our current week equilibrium right there. That's line, this line right here, current week equilibrium. If y'all can see me moving the mouse there, that yellow dotted line, we came back, broke below that in the discount, and on the prior week's dealing range, the full dealing range from this purple line at the top to this purple line at the bottom, then it's right at the equilibrium slight discount for that fair value gap, right? I mean, for that, yeah, that 4-hour fair value gap. So it hit the daily premium, came down and delivered to a 4-hour discount. Daily premium PDA, 4-hour discount PDA. All right. So that's a mouthful for me. Let me move this out the way. Okay, so now we're in Thursday. Okay, so now the Thursday mind frame, the Thursday going into Friday mind frame is still fresh in my mind because that's the last trade that I took. So that one is a little more fresh in my mind. So since we came down to the 4 hour. That's why I was like, okay, I was hedged. I believed in the longs more than I believe. So on Thursday, at the end of the day on Thursday, I believed in the longs more than I believed in the shorts, because what we had done, we had just, it was a bearish week, but we had just took out for the week. When I say just, between Monday, Tuesday, Wednesday, and Thursday, we had just took out daily premium PDAs, and we had just delivered it to, we had just touched, should I say, we had just touched a 4 hour PDA and started reversing. Right, we didn't keep flushing. We started reversing at that 4 hour PDA in the discount, or right at equilibrium if you're looking at the overall thing. So I was like, right. That's why I was like, notice we right at this daily order block now. We're coming down into this daily order block, and we still haven't hit equilibrium, which would be right around this right there where I'm moving the mouse. Let me put a line there. I'll just go ahead and put a line there. Right there. So that's equilibrium for that order block right there. This order block right here, that's equilibrium for that order block. Remember when I was like, equilibrium on that order block would be the bottom of this fair value gap. And remember, like we be looking at the candle like this, because it was Friday morning, right? For the daily candle, it'd be like that. And I was like, we coming to the what's the name there? We coming to equilibrium on that order block. Now, this is another time where I also laid out the CBDR range. This is when I was trying to show you. Remember, I had the range laid out already, and I was trying to like show y'all why I put it there, but I couldn't get the fibs right. I was like, I couldn't figure out. I realized what I was doing wrong with the fibs. Okay, so we got to find Thursday at 8 o'clock. Okay, so Thursday 8 o'clock right there, right? This right there, Thursday 8 o'clock. So let me see, what's the low on the low on this candle is, I mean, the close of this candle is 36.62 even. The open on this candle right here is 32.6. So this is the lowest candle during the range, right? Right there, this little red candle. And then we're gonna find 1400. 1400 he is right here. So this is the 1400 candle. So from 1400 over to there, right? That right there would be the highest candle, right? Because that's 1400. That would be the highest candle. And then that right there would be the lowest candle. Right. Let me get my snap on. Let me spread this out so y'all can see what I'm talking about. Okay, so from get out the way, add. All right, so from 1400, this 1400 candle. So from 1400 this way, right? This candle body right there will be the highest candle body, right? And then this is 8, this is 1900, 2000. 2000, this candle body right here would be the lowest candle body. Boom, right? So now one standard deviation from there, let's take this one. We're just gonna put it right there at one standard deviation right there. All right. And that's why I had the line there. So I couldn't figure out why I had the line there last time. Everything just kept like acting crazy, kept acting. I'm like, I couldn't, but I was on the wrong time frame. Like I was on a 15-minute and I was like picking the wrong candles. But that's how you actually do it. You look between 2 o'clock and 8 o'clock, and wherever the highest body and lowest body is. And you also want to keep in mind the highest wick and the lowest wick. ICT say he do it primarily off the bodies because that's the bulk of the volume, but he also keep in mind the highest for the wicks too. So I always monitor both. Like I always look at the highest wick. So this is 1500. I look at the highest wick to the lowest wick also. And one standard deviation from that would be, you know what I'm saying, like a little lower down. Like it'll be like down there from wick to wick. But I'll be, I monitor both, but from me forward testing it so far, it's been kind of holding true to the bodies, right? So, all right. Since we're on the hourly, we'll just stay here. So we came down. Now that we So now that we on Thursday, we came down to that 4 hour. So I was looking, I believed in the longs more, right? So um um and I hedged, right? So I hedged. So I got them at the end of the day because I didn't know how price was going to act the next day. So I just got them then because my plan was if it didn't give me the move that I wanted, I was just going to hold them, you know what I'm saying, until next week. You see what I'm saying? So I got them at the end of the day, basing it off of the daily time frames and the daily and the 4 hour instead of going to the intraday levels and looking for my entry on the intraday levels. But on the intraday level, the entry technique that I would have used and I was watching, I was watching, and if I was going to get in too much trouble on my on my my real position or my hedge, if my real position was like going too far against me, you know what I'm saying, I was gonna come in and get a same day, another same day hedge to offset even more because the same day premium move faster. But back on track. So what is let me see where we at. I need to get on track. Let me get on track because I done dropped down to these hourly candles and I'm lost right now. Okay, Friday, Thursday. Okay, so that's midnight Friday right there. Okay, so midnight Friday. Um, right after midnight, we immediately started moving up. Right, just took off immediately. So whenever you come off of Friday, like if when you go past midnight and it just start taking off straight to the upside, right? That's another reason to start looking at that CBDR. You know what I'm saying? On the upside, even if you start off midnight and go straight down, that's another reason to start looking at that CBDR to go short in London or long in London. Like if right after midnight, like if the Asian kind of consolidate like it's doing right now, like I mean, like it did on Thursday, they ain't do like a whole lot of moving during the Asian like this right here, and then right after midnight, it just like, you know what I'm saying, went up like that, and at 3 o'clock it hit. Let's see how far up it went. Get me a fee up there. It was It's 8 o'clock. It didn't get back up there. It didn't get up like one standard deviation. Don't look like, because that's 20, and then that's 1400 right there. Yeah, so it didn't go one standard deviation, but when it be taking off like that, that can be a reason to short. And if you're looking right there, you could have shorted off the Asian range. That's another thing ICT be talking about. When it take off like that, the Asian range high could be a short. He talk about that a lot too, but I don't talk about that. So I mean, I don't be trading that because I don't be too much looking at the Asian range like that for real. But what I was saying, oh yeah, we came up and then we came down and moving into right before the New York Open. As you see, we came down one standard deviation down from the CBDR range, came down to the bottom of that 4 hour fair value gap, completed that, right? Got into that right close to the equilibrium of um that daily order block. If you look over here, right, we also came right there to an hourly order block. So we got a lot of confluence there. We got a one standard deviation CBDR, right? We combined with an hourly order block and an hourly fair value gap in the exact same spot. So we got an hourly fair value gap there. This also is a liquidity void on the hourly. We got a sell, we got a buy side imbalance right there. So we got a sell side liquidity void right here. We got one fair value gap, two fair value gaps, and an order block right there, right at one standard deviation from the CBDR the prior day. It's a whole lot of confluence in here. And this black line right there, that's the mean threshold of the daily order block that we're in. So all of that right there, this is where I was like, I could have taken off my my hedges for a nice profit and still kept my profit on my calls. But since we were in a bearish week, I was like, it might fake me out and keep going. And I didn't. Since we coming down, you know, the calls are going in the red and the puts are going green, right? So since we was going down, I didn't want to close these puts and then we just get a fake little bounce up, right? And because you see, we coming right here, we right at equilibrium for the overall range. I didn't want to come down, get a fake bounce up, right? And then it'd be a failure swing back up here. And then we just take, like, come back up, don't hit this high, then we take back off to the downside. So I was like, I believe in the long, so I'm just gonna leave the hedge on, even though it's in profit, even though I can close it and take the profit. I wasn't gonna take the chance, and I did the hedge for a reason. The hedge is there if my thesis fail for the long, and my thesis don't fail for the long until we get a closure below 50% of this daily order block. That's when my that's when my thesis for the long would have been broken. And since we didn't break down past that, I left the hedge in place, I left the longs in place, and then once we blast back off, right, and got the breaking structure, and when we came back down to the breaking structure, that's when I closed the hedges for a small loss, and then just let the longs ride. I closed the puts here for a small loss because we got the breaking market structure to the upside, right? We formed this later became an order block. So we got the breaking market structure to the upside, got the fair value gap, and that right there, that could have been, you know, say an entry off the 1 hour. We'll break down to a 15-minute to see, but you know what I'm saying, we got the breaking market structure, fair value gap, retrace right there to the breaking market structure on the 1 hour. That's the 1 hour. And let's go down to the 15-minute and see what that looked like. That would have been an intraday entry for the same thing that I put on the day before. Okay, we hit the CBDR, we came up, we got the breaking market structure right there, we got a fair value gap, right? Came back down, same thing. It's the same thing on the 15-minute, so it's the same entry, came back to the same fair value gap area, breaking market structure, fair value gap retrace right there. So that would have been the same entry point on the 15-minute or the 1 hour for the same trade that I had taken the day before, but this was just the intraday entry for that same trade. But I was just taking it off of the hour, off the daily time frame. But if you want to wait until the next day, this is the setup you would have been looking for, because we came back to that 4 hour PDA after taking out that daily PDA in the premium. Then once you see that, then the next day you come in and look for your entry, meaning you're looking for it to come down, either looking at this CBDR or looking at another discount fair PDA. Take your entry off of that and then take it up. You know what I'm saying? But during the New York or the London kill zone. So this right here, this is before market open, and this right here would have been the entry during the kill zone right there. That's your kill zone entry to go up for the intraday, getting into it. And that, ladies and gentlemen, is my very long-winded breakdown of the ICT concepts that I looked at throughout this week, to help me along with some trades that I took this week. I didn't go over every trade I took, but I could remember the one that I did for Friday was the freshest in my mind. And hopefully that was helpful to somebody, man. If y'all got something out of this, I appreciate y'all hitting the like button. If or sharing it with somebody who you think will get something out of it. But I just want to do it, like I say, this week. The other Friday, I had sent out a photo. I sent out a photo on IG inside the Spider Gang group, because y'all know I ain't active on social media no more besides YouTube, and I know everybody not privy to that group, and so I want to be fair and just go back and talk through it. And I'm a visual person. I need to see it and hear it. So looking at that picture don't translate the same as me going through, talking through why I put every line in there. This might be long, this might be drawn out, but it's the way that little Timmy Rogers learned. So the purpose of doing Tim's Tidbit is to share it in the way that I learn. You know what I'm saying? I sometimes I send out the little pictures with the notes because I want to like kind of share any way I can. But this is my primary way of doing it, by talking it out, because this is the way the little voice in my head, little Timmy Rogers, understands stuff. I appreciate y'all for tapping in. Do anybody got anything before I get out of here? Ain't nothing really going on in the chat. Let me see who I haven't hollered at. Did I holler at you, Dominique? Yeah, I hollered at you, Dominique. What's happening? Robinson, yeah, I hollered at you. What's up, Tanya? How you doing, Tanya? You still got that vid? You over that vid yet, Tanya? What's up, Audrey? Did I speak to you, Audrey? Love her. I know I spoke to Michelle Tucker? Edward, what's happening, Edward? Edward, you ride motorcycles, man? Is that a motorcycle or a scooter? Oh, that's a motorcycle. What's up, DXM? DX. Every time I see that, I think about that. What's up, DXM? What's up? What's up? I can't, I can't say. I tried to say it one time before, and you said I tore it up. But what's up with you, Grant? What's up with you? I tried to say your first name before, and you said I tore it up. You feeling much better? I appreciate it. I'm thankful of that. I'm thankful that you feeling better. Thought I saw the light. Caroline, don't go into the light, Caroline. Hey, man. Hey, that's all I got, man. I took my glasses off. What Laverne said. Oh, thanks. Yeah, you're welcome. That's all I got, man. It's a Saturday night. It's 8 o'clock on a Saturday night. Whoo. I'm going, Tim, you got what? Tim, you got a video. You got a video break down your strategy. Man, my strategy done changed up so much. I got videos breaking down strategies on my in my playlist somewhere, but my strategy done changed up so much, man. It's like I'm growing as a trader. So that's why I sat down today and I started making up a list of the video. This is what I decided to do with the pre-recorded videos, y'all. I'm glad you asked that, Edward. What I'm gonna do, I'm focusing on y'all. Initially, I was going to like start, you know how I discipline over dollars when I started from the beginning. Like, for anybody who don't know what the stock market is, don't know nothing, that's where I started, with discipline over dollars. But with these pre-recorded videos that I'm gonna put up, since these live sessions be so long, it's hard to go find the gems. With the pre-recorded videos, what I've decided I'm going to do, I'm focusing on y'all. Y'all already know about the stock market. Y'all already know what candles are. Y'all already got a basic understanding of what we doing, right? So I'm starting at where I'm gonna start at is ICT lingo. That's gonna be the first few videos. You know what I'm saying? What's a swing high? What's a swing low? What's an order block? What's a fair value gap? All the ICT lingo, right? I'm gonna start with all the ICT lingo. I started making up my outline today. I'm doing with all the lingo, right? Going over all the lingo, and pretty much, and you know what I'm saying? What's a premium market? What's a discount market? You know what I'm saying? What's the equilibrium? All that, I'm going through all the lingo. And then once I do the video on all the lingo, you know what I'm saying, then you can go in and be like, okay, I'm not good with breakers. Let me go see what a breaker is. Okay, I'm not good with order blocks. Let me go see what an order block is. And everything gonna be in the way I understand it. Plus, I'm gonna try to refer you back to the video that he do. I ain't gonna promise that, because I would have to go find the videos and then link to the videos. But you know what I'm saying, I might add that in. I don't know. But anyway, it's going to be the way I understand it to be, right? And then once I do all of those videos, and then I'm going to go into how to connect the dots of reading the price. Like, I'm going to go into reading the price action, right? I'm going to do reading the price action videos for bullish scenarios, and incorporating the lingo from the different PDAs, then reading the price action from the bearish scenario, incorporating the PDAs, and then I'm gonna go into strategies using all of that right there. Now you know how to read the price action along with the PDAs and all that right there. Then I'm gonna go into like the different strategies of using the different thing right there. So it's gonna be, that's the outline that I'm gonna be doing. It's gonna be focused primarily. When I say y'all, I mean the ones that be here all the time, the ones that already know about trading already. I ain't gonna say I'm not worrying about, but this series of breaking down all the ICT content is just gonna be for y'all, everybody that already know how to trade and everybody that want to learn the ICT stuff a little bit better. And it's just gonna be everything that little Timmy Rogers understand about ICT stuff. And so that way you can go in and be like, okay, I want to see how to, trade with fair value gap strategies. I want to see how to trade with breaker strategies. I want to see how to trade with since I want to see how to trade with breaker strategies, let me go ahead and look and see what's a breaker, right? Okay, now I know what a breaker is. Now I can go over here and look at the video that say trade with breaker strategies. Okay, I want to trade with fair value gaps. Let me go over here and find out what a fair value gap is. Okay, now let me go look at this video for trading fair value gap strategies. You know what I'm saying? I want to know what this is. You know what I'm saying? I want, you know what I'm saying? Let me go look at this video. So that's how I'm gonna do it. I'm gonna break it down like that. And so I decided that now that I got exactly how I want to do it, I'm gonna start recording the videos and I'm gonna have them. And I don't know if I want to put them. I think I'm gonna put them in. Should I put them in separate playlists, like the lingo, the lingo, the price action, and the strategies in 3 different playlists, and then have the lingo videos in the thing with like all the different ones, the price action videos with like the price, reading the price action, and then the strategy playlist with the different ones. Y'all think I should? Y'all think I should? Yeah, I'm gonna do it like that. I think that's more organized, and that way you ain't got to scroll through no long list and be like, okay, I want to. Then you already know. Okay, I want to figure out how to. I want to figure out what a mitigation block is. So let me go to the lingo playlist. What's a mitigate? Okay, I want to figure out, you know what I'm saying, reading the price action. How should I read it? Looking up to if I think the it's gonna be bearish or bullish, or you know what I'm saying. Let me figure out how to do that and see. All right, now that I see how to read it for that, now I'm a order block trader. Now let me see strategies for trading order blocks. So you go over here to the strategy and all of that right there. So yeah, that's how I'm gonna do it. I'm gonna do 3 different playlists. Thank y'all for talking it out. That way it'll be like an encyclopedia. Yes. Spider games. Spider games. Hey, I like that. I like that. Organized topics. Yes. Appreciate that. I appreciate you checking it out. And when I put it up there, yeah, check it out. And then what you say, pick, yeah, that way you can pick your own model. That way you can pick your own model. Hey, that's it, man. I'm getting hungry. My stomach growling. I have not cooked. What hey, Chris? I have not cooked. Hold on. Yeah, I have not cooked. I don't know if I feel like cooking. So yeah, I'm gonna get out of it. One of y'all gonna treat me to dinner?
I got you.
You got me? What you buying?
All right, you want to go to Zaxby's?
Do you want to go to Zaxby's? Come say hey on the live.
Hello, everyone. How are you?
Chris said he gonna treat me to Zaxby's. Hey, I appreciate y'all. See, I got on my green discipline over dollar shirt today. Discipline over dollar. Yeah, I can't wear this when I be on the back there in the studio. I can't. Hey, I ain't never show y'all the studio. Did I ever show y'all the studio setup? Let me show y'all the studio setup. Hey, golly, I can't think of the movies. I'm gonna show y'all the studio setup real quick, and then I'm gonna get out of here. Ooh. Alexa, turn studio light on. I'm gonna show y'all the studio setup real quick, and I'm gonna get out of here. It's dark up over here, but yeah, that's why I be sitting right there. Got the dual monitors. They turned it off right now. This my This right here is my this my face light here. I turn it on up under the desk right down here. That's my ooh, that's super bright. That's my face light. Let me turn it down some. Right, that's my face light that be shining on my face. And then I got my dual monitor set up right there. Turn that on if it come on. There you go. So I be y'all, of course, I be sitting in the chair. That light up there, this light right here shine on the green screen. I pull that one up and it shine on the green screen. The little light that I had out there, I have a light that I stick to this. That be my soul glow. I got it out there right now. That's what I was using out there, but I stick it there. That be my soul glow light, right? And so, and then this is my I used to use a different green screen that I put on a I used to put it on a stand, but now I use this I made this a long time ago. This green screen here, I made it a long time ago, right? And I put hooks in the ceiling. I did this a while back. I put hooks up in the ceiling like this right here. And then I just come around. I just hook it on the ceiling like this right here. Just hang it up. Like that. Boom. Boom. And then now I just be in here around the back and I clip it on there so it don't, you know what I'm saying, it don't come around. Then boom. That's where I'm at. This would be my little side. Then I just sit, I can't use the shirt. I just sit. Man, why y'all didn't tell me I was muted this whole time? How y'all didn't tell me I was muted this whole time? How long I been muted? Was I muted that whole time when I came back here? Was I muted that whole time? Oh, it just happened. So y'all heard everything I was saying? Nah, 1 second. Okay. So y'all heard what I was saying. Y'all, I wasn't like muted the whole time when I was like putting up the green screen and all that right there. Y'all could hear all that. Anyway, I'm about to get out of here, man. And then I just leave this up. See this right here, I just leave this one up and I just roll it out my way. So I can just, cause I go live every day. So I just leave it up, hang it on that side. You know what I'm saying? I don't never take it down. I just leave it hanging up there and I just roll one side out of the way. All right. But yeah, man. And I put these up a while back. I mounted them on the wall myself. You know what I'm saying? Cause my daddy was a carpenter. I put these up a while back. Cause that's back when I told y'all Tim's Tidbits were supposed to be like video and photography tips. And like me and Junior used to do like podcasts. We had like a little podcast we used to do together back there. But anyway, man. I just want to share that with y'all real quick. I know y'all probably don't care. You're probably like, man, I don't nobody care about that, Tim. Talk about some stock market stuff. Anyway, man, I see y'all tomorrow for the weekly chart prep. And again, I appreciate y'all for hanging out, man. I see y'all at 3. You're welcome. You're welcome. Is that like K-Pish? Is it K-Pish or is it just Pish? Or am I saying it wrong? You're welcome, Tanya. Glad you're feeling better. I'll see y'all tomorrow at 3. I don't have it. Oh, we're not gonna be able to do nothing Monday morning. Chris got a doctor's appointment. Monday morning, so we're not gonna do the overnight price action Monday, but we will do the weekly chart prep tomorrow at 3:00. I'll see y'all tomorrow, man. About to go get something to eat. What is that? All right, then, gone.